The Nigerian Naira, of course, has witnessed a significant appreciation in the parallel foreign exchange market, reaching 1,120 Naira. Yay! That's what everybody's saying. Well, to the dollar earlier this week. What prompted Bureau de Change operators to set the purchase price of the dollar at 1,100 Naira and the selling price at 1,120 Naira, thereby earning a profit margin of 20 Naira per dollar. Now, in the official trading window, the Naira strengthened by 1.63% to $1,230.61, up from $1,251.05 on April the 5th.
And despite the interesting news, goods and commodities, especially food items, are yet to reduce in price. The Ed-El-Fitr celebration saw some Nigerians complain about food purchase in the north and middle belt. And as for the southwest, the prices are either stagnant, as it was in the past 4 months, or has further increased. This morning, we're joined by Rasak Fatai. He's a policy strategist and economist. Good morning. Thank you very much and welcome to the show. Whilst a number of us are excited about the growth of the Naira, the growth of the strength of the Naira, there are others who say that this is artificial and that in a few months, things will revert back to the state of chaos that it was. Is this a valid argument, and is this something to be worried about?
Hi, first, thanks for having me. Is this something to be worried about that the currency is appreciating? First, let's look at what has led us to this moment. And I'll summarize them into 4 buckets, right? Of 4 key actions that the CBN, led by Cardoso, has taken. The first is that we've seen that he has implemented reforms, right? Which has improved market, transparency and price discovery. And he has also done a lot of reforms around limiting bank exposure to making sure that their dollar exposure is aligned to their deposit structure. And the second thing I was seeing that he has done, which has helped with the situation, is that he has raised interest rates. He has taken a lot of measures to improve liquidity, restarted market operation at a rate that is more consistent with the market, right, which encourages mopping up of excess Naira. And also, we've seen that they've, halted development finance schemes, such as the one that has been extended to agricultural sector, which has also helped to reduce, excess money. And lastly, we've seen that, people now look forward to the bank, as a guide. They look forward to the official rate to guide their FX transaction, suggesting that people now trust the bank authority more than before. However, I think one of the things that has been really concerning is that when you look at when the currency appreciation started, from the middle of March to today, we've seen that the currency has also, the foreign reserves has also been depleted consistently, losing almost about $1 billion over that same period. However, there is not enough evidence to suggest that the bank has been defending Naira because there is really no data to say, okay, this is where the foreign reserves has been going to. But that's one thing that is concerning. And also the fact that the other concerning factor is the fact that while crude oil production has increased early in the year, we saw that it went down slightly in February. We suggest that there are still significant risks to crude oil production. It's theft, and what that means is that if that trajectory continues, we might see some reversal, right, later in the year, back to maybe around 1.415 that it's as were before March, before it started to decline. But just to say that what would determine what eventually happens is, the ability for the country to address those key factors that could help boost, dollar supply in the long run, right? And what that means is that we need to increase crude oil production, make sure we sustain efforts to help test, attract investment, to boost the oil production. So for me, I think that is what is really key going forward.
Okay. Anyway, for me, it's about the question that everyone seems to be asking. Why is it that, in as much as the dollar is, or the Naira is gaining its strength, the goods and commodities are not coming down? So it seems like it's a curse, the curse of Nigeria's economy, that whatever goes up never comes down. So is there any explanation to this? And what should those involved in sales or the middlemen, what do you think can be done by the government to ensure that the prices, there's a regulation, especially on the price of commodities?
Thank you. So first, let me correct the notion that when prices go up, it doesn't come down, and that's not true. It's a myth, and there are several evidence to support this. Because we've seen during the first recession that happened in 2015 due to price shock, which led to significant inflation, and then from around 2018 when we started to see some signs of relief, we saw prices of food items and even other items were a bit flat and even came down significantly during that period. And this is not something, that's not the first time it's happened. It has also happened, in the past. But the challenge has always been that prices in Nigeria is, quite sticky to remain upward, right? For example, when we saw dollar increase, exchange rate increased massively early in the year, right? From about 1.2 to 1.6. We saw how that was quickly reflected in prices of goods. But when it comes to, exchange rate becoming more favorable, or when it comes to raw materials being cheaper, we would see that the reaction of the market is usually a bit lagged, right? Slow. And the reason why, businesses do this is that because they are very cautious, because if you look at what has happened in Nigeria for the last 3 years, there has been so much volatility in exchange rate. There has been so much price instability and unpredictability for planning for businesses. And any reasonable and rational business will try to just see if this trend is going to be sustainable before they adjust that. And as a result, I would see that prices would come down, but at a slower pace, right? Maybe we could see significant change from like the middle of the year if we are able to sustain this exchange rate over the next 2 to 3 months. However, the other point I want to point is that our inflation is largely driven by domestic factors, against what people often think is due to exchange rate. And the reason for this is that if you look at what constitutes the consumer price index, more than 50% of that is accounted by food. And if you look at food inflation versus imported food inflation, you see that it's higher than imported, suggesting that the factors are largely domestic. Factors such as insecurity has been on the rise, and we've not been able to produce enough food essentially. And should that persist through this year, we are currently in rainy season now. Farmers are planting, but if the government doesn't do enough to ensure that they secure these farmers and ensure they provide adequate support to help them boost production, we'd say that even with all of these efforts that we're seeing, we won't make significant progress. And the last point I wanted to raise is that inflation is still highly vulnerable to other factors, which could actually derail the progress in effort to curb inflation. As we've seen that electricity tariff was just recently adjusted by almost 200%, which will increase production costs significantly for businesses. But more importantly, there is a big elephant in the room, fuel subsidy, which nobody is really talking about right now, right? As we've seen that the government has continued to, subsidize for, and should that also be removed, we could see a serious spike in inflation. And also beyond this, there are several other underlying, structural factors in Nigeria, behavioral issues that could help, prevent prices from, coming down to a level that would have been consistent with market dynamics. But notwithstanding, I think if we are able to sustain, the exchange rate gain, if we are able to address issues related to crude oil production, if we are able to tackle insecurity, and if government is able to provide adequate stimulus to critical sectors, right, we should begin to see better growth prospects. We should be able to see inflation come down consistently over the next, 2 years.
All right. And how soon are we expected to start seeing an improvement in the area of foreign direct investments in Nigeria?
Okay, so for foreign direct investment, from the word they said direct investment, it's that those investments are usually long term, right? And because they are long term, investors will be looking at several factors. One of them is, the monetary policy dynamics, capital control, whether it's easy for them to repatriate their capital and all that are critical factors. But there are more important factors that, evidence has suggest are very critical in helping, people to make decisions on whether to invest in a country. And those factors are issues like energy cost, energy supply and energy cost, which is still very high in Nigeria, and other regulatory issues, access to land, making sure that cases are able to be resolved when businesses have cases, court cases, and all that, which are still very big issue in the country. So I would say that we may see some improvements in foreign direct investment, but I don't see it being as significant as it should have been, right? Because even in the past, we haven't done enough when the economy was a bit stable. So for me, I think the focus of this government has to be around how do we attract investment, how do we improve the business environment, how do we lower energy costs for businesses, and how do we improve the tax environment to make sure that they are not prohibitive to business growth. Okay. So for me, those are the factors that are very critical, to attract FDI.
Thank you so much, Razak Fatai, for joining us, policy strategist and economist, helping us to clear the air on the excitement that Nigerians are indeed having, and that feeling, and letting them know what is to come. We appreciate your time with us here on Breakfast Central.
All right. Thanks for having me.